Today we're going to talk about Evolution AB earnings. They posted them yesterday or 2 days ago, and right after the stock dropped by 8%. Today it's going back a little up, so it's kind of saying what was happening yesterday. Generally it was fine. They had some bad news or less than expected, but at the end of the day, it's been 6 months, it's like this, so we know already all those problems. So the market now is getting up again a little, but still it was dropped 8%. I read the transcript, the document, and I put here the main thing, the most important thing that we should remember from yesterday conference call and the earning announcement. So first thing, it's down year over year around 32%, okay? Stock fell around 8% after the release of the earnings. When it's come to growth, they had 12% adjusted revenue growth, okay, which is kind of in line with the global market growth. The online gaming is growing between 10 and 15%, so it's kind of fine, but we expect a bit more for them because they are the leader of the market and they potentially have the best game and should have a higher growth. But we'll see that 12% is still fine, okay? And without adjustment, it's 32%. The adjustment is because of accountability thing with a new business that they acquire, but it's not good like they want. So it's accountability. So on the website, on FinChat, on Guru Focus and so on, you may see plus 32% of revenue growth, but the truth is 12%, okay? The good one is the adjusted one. In Asia, they grew by 10%, North America 20%, Latin America 20%, and Europe 8%. So low growth in Europe because they are really implanted in it. And in Asia, which is the main market for them, 10% growth. It's mostly due to some problems that they faced with some cyber attacks. So less growth in China. It should be better later this year and maybe in 2026. But 10% is it's still fine, and it's their bigger market for now. In 2025, they expect to grow between 10 and 15% again, which is a good growth, especially at the price that you pay the stock now, which is a PE of 13, something like this. When it comes to margin, here where the biggest problem were, okay? I mean, at least for the investor and for the market, well, it's not that bad, to be honest. So they had around 68 adjusted EBITDA margin compared to 70% in the previous year. So it's a decrease of 2% in the EBITDA margin, and they expect a decrease for next year, and it will be between 66 and 68% EBITDA margin. So here, the problem, let's say, even though 66% EBITDA margin, it's still very, very good. But it's in decrease. The reason of this decline, cyber attack in Asia, okay, it's the main revenue region, and yeah, they need to face this. They need to find solution to stop this problem because this really affected the business. And the second reason is new studios in more regulated market, so with higher cost of running. When you want to open studio in North America, you have to be careful because you will pay way more the salaries. You will have more real estate to pay. Everything is more expensive than when you open in Czech Republic or in Georgia or in Colombia or in Philippines. So they want to get into those regulated markets. So that's why you need to decrease the margin. And again, it's something we knew since a year or two, since they want to get in those markets. We knew that it will be less margin for them in those markets. But still, they managed to grow 20% in North America, which is very good because they really there is a big potential for this market. Okay, so this is the main reason for the margin decline. When it comes to capital allocation, so no acquisition is planned. The previous ones were not very good, so it's a good news that they don't plan new acquisition because they just show that as it's not where they are very good, it's not the best way for them to create shareholders value. So this year they prefer to stop this. They plan to use 100% of their cash for dividend and buybacks. They plan 500 million euro buyback in 2025, which is approximately 3% of the market cap, plus a dividend between 3 and 4%. So the shareholder yield is between 6 and 7%, which is very good. For the capex, it should be around 140 million, which is the same than last year approximately, okay? So no increase of CapEx, while we'll have an increase in revenue. So increased revenue, no increase of CapEx, it means more potential free cash flow, which is quite a good news, especially for now. So it means that potentially if the stock price doesn't move, like the valuation will be again lower. So that's pretty good news for shareholder. Now, when it comes to cybersecurity, okay, the Asian hacks should be not solved before semester 2 of 2025. So before July, you should not expect any resolution of the problems that they have faced. Of course, they plan to invest in this for 2025 to not have this problem again. But from what they say, they expect to be solved more in the second semester of the year than the first one. Maybe we'll have good surprise. It would be great if we have good surprise, but from what they say, it will be more in the second semester. When it comes to the strikes that they had in Georgia, apparently they are controlled. They didn't say they are solved, they say they are controlled. So this, I have some issues with this, in the sense that when the problem is solved, you say the problem is solved. You don't say it's controlled, because if it's controlled, the problem is still here and you're still figuring out a way to solve it correctly. But for now, what they did, they reduced the workforce there. Okay, they start to get out of this country and they invest massively in Colombia and Czech Republic to, again, have the studio turning, have the studio working like this. They can continue to do what they're doing. So I'm not saying Georgia strikes and so on, everything is finished, but they are moving on. They are working on new things now. So it should have less and less effect on the revenue of the company. An important news as well, this wasn't specially for this earnings call, but it was during the 2024 years, they changed the CFO. So there is a new CFO, and here I have some concern about it because he doesn't really have a good track record. Okay, the last two companies did not perform well with him as a CFO. So I don't really understand why they took someone like this. Plus, this industry is new for him, like he's new in it. So yeah, I'm questioning the choice of this CFO. Is there something hidden? Is there like, is he a golden gem or hidden gem? I don't know, but I don't really understand why he is here. We'll see in the next months, in the next years, if he can do something good, but this is not really good news. This is something like, I'm a bit dubitative on it. And the plans for the year 2025, okay, they plan to open 3 or 4 studios, mostly in Philippines and Brazil. They really want to enter in Brazilian market, so they can have some good revenue from it. They're working with authorities to not be in the dark or gray zone. You know, there is a lot of regulation, and they're trying to get more and more into the regulated market, okay? So it will probably mean less margin, a decrease in margins, but on the long run, it will help them to grow. So, okay, maybe we can accept to decrease a bit the margin if it means that we can continue to have double-digit growth for the next 10 years. So, yeah, this is important. And the last thing, they are releasing new games. I think hundreds of new games every year. They continue to plan to release 100 new games every year. So this is pretty good because the main business of them is having good games. So if they continue to create new games that people love and that people play, it will increase their revenue and they will still continue to get more and more clients. We need to know that for now, Evolution AB, it's the market leader in this. They're far away from everybody. You have only 2 companies that are not close to them, but they are competing. One is totally far away and another one is competing seriously, but still, Evolution is really in front of them. So for me, this earnings call didn't change anything on my position on Evolution AB. I still consider that this stock is undervalued. You need to know as well that it will take time for the stock to go up correctly again, in a sense that it's not ESG friendly, so you don't have a lot of investment fund investing massively on it. It's a stock in Sweden, so it's not on American market. Like you may have some ADR on it, I didn't check because I bought it on the Swedish market. And you don't have apparently Robinhood and other famous broker from United States that allow you to buy this stock. So it will take time, I guess, before the confidence of investor come back. But the thing is, when the confidence will come back, this stock is such undervalued that it may go very, very fast and you can have a very good return. Remember, we are paying this stock for a PE of 13 for stocks, which is growing between 10 and 15% revenue per year. So yeah, I will be curious to know your opinion on this stock in the comment section. It will be interesting to see your view, to see the analysis that you have. Remember that for me, it's a part of my portfolio. I think it's around 5 or 6% of my portfolio, so it's not a very big part, but it's still an interesting part, and I may, during the year, if the price continue to decline or stay stable, invest a bit more in this company because the fundamentals are very, very good.